Hello, ladies and gentlemen, and welcome back. Well, many of you are excited out there in the community because we're seeing action in these stock markets. Last week, we reported about the weakness that we expected off the 200 SMA. So far, so good for the bears, and the market has really sold off fairly heavily. But we've entered what we call the demand zone. We've got a lot of news coming out this week that we'll discuss in today's video. We've got a lot of large money traders doing something a little bit worrying for the small money traders. And will we now rally to fill some of the gaps that we've left behind before selling off, or are we about to just see the apocalypse coming to the markets? There's so much to discuss in today's video, so join us right now as we talk about everything to do with the markets. I'm pretty pumped. It's time to go. Let's do it. All right, well, welcome back everyone to the Daily Show where we talk about stocks, commodities, and cryptos. We've got an action-packed video for you today. Let's get started by talking about the sea of red. And yes, it was red. Microsoft, Apple, Google, Amazon, Tesla, everything was down. In particular, though, notice the semiconductors fell more. For a lot of people, they try to short Apple, and it's pretty hard to short Apple. Apple's one of the best stocks in the markets. We did discuss this in our live stream. We always do every Monday pre-market open. If you're interested in joining it, make sure to subscribe for that. But Nvidia basically fell 4.57%. So it was probably one of the better big shorts on the day in terms of what happened. It's time for our little quarterly update here as well on what the strategists are thinking for the S&P 500 year-end targets. Notice how many of them have changed. Down here, we have 1,000 point change as of the different dates, 4,600 to 3,600. Most of them seem to be thinking around that 4,300 by the end of the year. Notice that's what we just reached recently, but don't worry, there's plenty of time for, of course, a lot of kind of kindling here and rejigging of the figures to get big changes coming through. Don't use that as your analysis for charts. It will not help you, but it's a great one just to see what the general gist of people are. And at the moment, I would say they're neutral to the current level. As stocks drop, small option traders buy, large ones sell. So this is a difference between the robo or the put call ratio of the small traders and the large traders. Notice the big difference here. This is exactly the type of difference you want to see with the beginning of a fall off market. Retail traders have been convinced that the market is bullish. They will buy the dip. Sometimes that will be correct, sometimes that will be wrong, but they're going to have to be very careful about navigating this market. When we see this type of reading, it leads on to some interesting stats. Here we have what those stats are, and they're not really favorable for the bulls over, let's call it, the next couple of months. Notice here, when we've seen these fairly rare readings, actually, we haven't tended to have incredible rallies in the markets. We've actually had a lot of weakness. This was symptomatic of the 2001 to 2003 kind of crash. We also had it happening in the GFC, and sometimes when it happened outside of those periods, 2011, 2012, 13, it was okay. Statistics would say it's less than a coin flip in some cases, and that's pretty bad for the market. Remember, the market is 59% bullish. That is, if you took every day throughout history, generally, most markets are bullish on most days. So it is hard to be a shorter, but sometimes it does pay to be one. Why are people so freaked out about the market? Well, here we have a pretty good source in terms of German year-ahead power price. You'll notice the huge spike, euro per megawatt hour. That is ridiculous. I mean, we've gone from 100 back in 2021, probably about 50 down here in 2020, to 700. Unfortunately, Europe is going to feel the pain of winter, and you can already see it here in these prices. I could see bankruptcies coming from this. I've already seen a couple of shares from some European big businesses where their bill went from 100,000 euros to 700 to 900,000 euros for the same period. That's an incredible spike up, and I do feel sorry for people out there because a lot of them are going to be doing it tough now over the winter months. Don't expect that to probably relent just yet. This is the ramification of everything we've discussed on the channel moving forward. Smart money versus dumb money. What's going on here? Well, of course, we have dumb money getting a little bit more freaked out about the market, certainly coming down, not at one of our extreme levels yet though, which is important to note. And smart money has kind of bought a little bit here in the last 24 hours. The upgrade or the update has been they've been purchasing a small amount. Is that important? Not really. It's only just a one-day read. Now, we are leading into one of the most volatile periods of usually midterm elections. The VIX actually did spike, so that's the volatility index. And we saw that it's kind of following the trend so far. Will we hit a VIX high in October? A lot of you are probably trying to bet on something like that. Midterm elections are a thing. We bring it up all the time. Here are the data stats. Of course, August and September. September is usually the weakest month of the year. Will it be so again? But don't forget, the stats for the end of the year could be an epic rally. Now, why could it be an epic rally? Well, it's because we have two thought processes here. Yes, I know this chart's a little bit blurry, but just focus more on the price action side. The correlation with these charts are basically 80% plus. These are all different periods in history, but they all have something in common. Every single one of them has fairly deep dips. Now, of course, in the bear case, the dip went on and kept dipping and dipping and dipping, and you didn't want to buy that one for a while. But notice that the bull cases all came down close to the lows and then rallied. I mean, that's kind of a good sign if you wanted to talk about correlation with markets right now and not feeling FOMO. It's good in terms of statistics here to see that the most correlated previous scenarios actually coincided with markets coming back down to their lows or close to, and then at least finding the bulls there. Here's the one we've been discussing in terms of all the data points together. If we are in a recession, which basically yields and bond curve yields already say, yes, we are. Of course, you could argue we already have seen it. Then in most scenarios, we pull back to the lows rather than the other scenario, which is just a full-on rally. We'll have to find out whether that's true, but it's certainly helpful to have that on the charts. If you're interested in those charts as well, we always bring them into these videos, so make sure to subscribe for all that type of stuff. So let's get into the big stuff. Let's talk about these charts and key levels. We'll start here with some lead indicators, then we'll get into something about the US dollar because, of course, it's going out of control. And we also will then move on to everything to do with indices and cryptos. So the VIX, back to a level it was of the previous kind of pullbacks, February, March, April. We're also leading into now, of course, the weakest times of the year, which is September into October, and the VIX is spiking into those points. No surprises here. VIX traders would probably be pretty happy with that. Another reason why this could be happening is check out this US 2-year yield. 2-year yield is 3.32. It's still very heavily inverted versus the 10-year, which shows us that a recession is fully underway or pretty much happening in the US. But at the same time, we also have here a big number because if yield cracks 3.4% during, let's say, the Jackson Hole Symposium with Fed Powell talking about everything he's going to be saying, well, that could lead into a stock market drawdown of pretty epic proportions. Now, of course, why does that happen? Well, this is really the story of 2022 so far. Inflation, inflation, inflation. How far will the Fed have to push the rate up? That's something that the market's clearly waiting to see what this symposium and what the Fed has to say about the numbers right now. Remember, they're data driven, so possibly it's a guessing game at this point. Now, if you were looking at it on the surface, you would say that the market's already made up its decision. It's basically pushed into US dollars, and I think it's pointed towards some kind of high here that sits at around 1990s prices. So if we scroll back over the US dollar and look back into history, yeah, so we're at a point here where we're back to those zones that we didn't reach since the 90s into the early 2000s. And all of this happened, if you remember rightly, before, of course, we saw the epic tech bust crash. So we actually saw the start of the tech bust crash, and then the US dollar came down as the economy weakened overall. Very interesting point. US dollar hit all the targets I had for it. Everything I had was really marked by this pink line here, which sat around 108.80. And at this stage, I would say we're either in excess or we're at a critical point where this rally has moved so quickly that you've got to be really, really careful about taking longs at this point. If you've missed out on the previous longs, oh well, so be it. If you took the distance from the breakout, took the previous distance, you'll notice it hits perfect. I would think we're at a point of resistance here for the US dollar at this stage. And that will make sense with some of the other charts we'll see soon. Let's move over to the euro. New lows, guys. This is historic times. We got underneath parity. And as we reported in our live streams and on Twitter, follow at FX Evolution on Twitter if you're interested, the euro had an incredible amount of retail traders really trying to long it. In fact, as of the time of this recording, it's up to 89% of retail traders are trying to buy the euro. Until they're convinced otherwise, it's going to be hard for the euro to go up too much, but it is through the previous low, and this is a critical point for it. Will it go down to like a 98 or even a 97? It's very possible. Don't try to fight this trend. Everyone else seems to be, but buying against the trend is going to be very, very, very tough until you see some structural setup. Speaking of buying against the trend for oil has been down over the recent weeks. We've really discussed this a lot. We've suspected, though, being where we are, which is a role reversal area on these charts, but also a Fibonacci level in terms of a 61.8 pullback of the big move that happened earlier this year. This is where the market seems to be trying to find bullish pressure. Now, I have suspected that oil might be bullish. This hammer kind of proves that to me. We have a long leg doji followed by a hammer candle. Hammer candles often seen as a bullish style candle. And you'll notice at the time of this recording, the market has gone through and actually made a little bit of a higher high today. This is a pretty decent spring. So if the market's going to go long, that is oil, it's going to go long here. And you would think next stop for it is around 95, and the stop after that somewhere in that 102, 104 area. So we'll watch this, we'll continue to focus on it, but I'll say one thing is oil hasn't looked better than this in a little while. That's a fairly strong move off a doji with, of course, everything behind it that could do well. What about gold though? So I've been focused on gold coming down. And it has. It fell off this level. We did very well to pick that level together. So well done to all of you guys. And it's fallen and it's fallen and it's fallen. It got through the 1755 zone. It kept coming down. And now we've hit the 61.8 fib pullback. We haven't quite got into that area of 1715 to 1720, which I would have hoped for. If the US dollar strengthens further, of course, gold will fall into this zone. This is one of those cases where you have to have patience and don't necessarily predict what the market's going to do next. If your aim was to grab some at 61.8 fib because you had a longer term plan, I wouldn't have blamed you for that. Absolutely not. But we haven't quite seen the turnaround story on gold yet. We've seen a beginning of the turnaround story, but not quite this type of structure that I would like to see. This is kind of the right thing. I would still expect it to come down and then potentially go long off this area around here, probably somewhere around that 1730. If it makes a new low, obviously next target 1715 for gold. That'll need US dollar up. Be careful around here, guys, but it has hit a pretty critical zone being that 61.8 fib. Let's get into some stocks. Tesla. Very interesting zone for this. It's going to coincide with a whole bunch of other things we'll look at soon. We'll actually take the distance from here to here using a volume profile. And what you'll notice is you have the point of control, and where it rested in the previous session was right around where you would expect the market to find that buying pressure. So Tesla has two major gaps ready to be filled. It's had some nice sell-off, it's stuck in a big range, and we're at the bottom of the range. Now, a lot of people are going to try to sell here. I don't know if that's the right move. Usually you wouldn't want to sell if it actually made new lows and closed below them, or sold at the top. But in this case, we're getting down into a point where you could easily see Tesla rally. And this is going to be the story through a lot of these stocks. Let's take a look here at Apple. And Apple is very similar. We had one gap fill. Now we've left two behind, similar to, of course, Tesla. We've got another one down here, which could easily be filled in the next session, 166. Notice the point of control here on the volume profile, a very heavy touch zone, something important to figure out. But what if we do hit that zone? Will we go boom, boom, fill in, and then come down later? That seems like probably one of the better plays in this market in terms of strategic technical analysis. Obviously, that's my opinion. Don't do it. Don't do anything with it, guys. But what I guess I'm getting at is filling gaps is a thing, and we've got a few here now to discuss and some scenarios to play out ahead of the Jackson Hole Symposium. Moving over to the DAX, similar. Fall off was larger in this one. Demand zone sitting just underneath here. Now, this is important because, of course, we knew the DAX was going to be the weakest of the markets. I mean, you look at that German power out power cost, it is insane. Like that is what 700-800%, even more. So it's a very, very large increase there. And we've got the DAX falling off considerably. I'll mark it just here so you can see the difference. DAX has fallen around 5.73% from the top. It came off a beautiful trend line, which we reported on the channel. So make sure to subscribe for these types of things, because this was a big one, and it was so much confluence with everything else. It was a really beautiful level. But now we enter into what we call demand. So will we see a rally followed by a short after that? This is the zone where if the buyers are going to come in, they'll show themselves here. The US 2000, Russell 2000, where are we? We're back at the point of control. So again, we're back at previous resistance, becomes support, a fib pullback. Everything kind of points towards the potential in this range for buyers to show recommitment before a potential new sell comes off. It's not a guarantee, nothing is, but it's certainly a very interesting zone that we've now reached. And this is what traders have to do. You have to flip your opinion sometimes when you hit key levels, which is what we always targeted. The S&P 500, we almost filled the perfect gap zone in the last point. 41.23 was the gap, and I think we got down to like 41.30-ish, maybe a little bit lower. I'll just read this. 41.29.86 was the official read. So we got really close to the gap. Notice the point of control sitting right on this zone. We've got here a boxed area where we expect the potential of buyers to show recommitment. We entered that box over the last 24 hours. Do we find buyers here? It's certainly quite possible. And of course, something that we'll be looking at throughout the rest of today's video. It's very key, pivotal point. Notice the gaps left behind by the market. This one in particular is glaring. Will we get a pullback to that zone? Where is it? It's sitting at 42.25. So 42.25, we've about filled this gap. We also have a significant close around this level. We know this is where the buyers have been before. Will they take up some of the slack demand? Again, you're looking for structural setups, you're looking for bases, you're looking for traps. There's always a chance the market just goes straight through these levels like it did through the 4200, but this is the big one. This is the first real issue that the bulls and the bears have had to fight since selling off at the top. So yeah, we're looking at that potential of the rally. Maybe we go towards a gap fill. 42.26 would be a pretty big level for it. Maybe a little bit higher than that, 42.30, 42.40, and then the potential of a sell-off occurs. Go back to synergize with previous times. If you go back over here, what was something that we saw happen during the crash over here in April? We saw lightning bolt pickups. And in fact, some of them were so brutal that they trapped many people into thinking it was a recovery play. It doesn't have to fall off a cliff like this all the time. It usually starts with the trapping. You've got to change the mentality of a lot of people. How do you do that? Oh, it's a buy the rip, buy the dip, buy the dip, buy the dip, buy the dip. Oh, no, it's not. That's the type of thing that the market will do, and it will manifest itself in price. So it's not always just like this. It's generally more of a like this. And we don't have enough catalysts yet to really short this market super heavily. So there's a real chance it bounces. But I would like to know your comments in the comments down below. Do you guys think that it's going to bounce here, or do you think it's going downtown? Maybe I'll put a poll out and we'll find out what the general community thinks. It's okay to have a different opinion. Of course, this is just a key zone that you must potentially react to and have the patience to deal with. What about the options? What are they telling us? Well, if we look towards the Wednesday maximum pain, we're sitting at this stage about 423. Obviously, we're trading quite a lot under that level at this point. Where are the key option strikes? We've got 415, which is kind of very close to the zone that we are at. And of course, 410. That's a good level, and it's what you kind of expect. What about the Friday though? A little bit more options obviously on the Friday. 415 again being one of the key points, and 410. So maybe this forms a kind of demand wall, or at least some form of support for this week. It's going to be potentially tough to get through there. Max pain again sitting at 420. So it's above the current market where the max pain is. Now, Monday didn't matter. Tuesday obviously doesn't really have options expiration. Wednesday, they're not that many, not that big. But by Friday, maybe there's going to be enough options out there for Wall Street to want to act on it. Again, just something to keep in that mind, keep in that process of what you're doing in the charts. If we go over to Bitcoin, this was strong. I've got to say, I was pretty impressed with Bitcoin's hold here. So it's holding this zone. I said in a previous video, I think it was the live stream, I wanted it to take these lows. So I would love to see like kind of a little sell-off early in the stock market for the next session, take the lows here on Bitcoin, and then move up. That will kind of prove that this is really great structure and will form that kind of max pain concept, which we like so much here on the channel. Moving back to 22 to 23,000, so 22.8 to 23,000 would be a great level. Previous supports, previous big zone, maybe even get a little bit higher into here, hit the supply zone. And yeah, this would be a fantastic kind of little opportunity there on Bitcoin should it reach those levels. A lot of people are going to focus 20,000. I think 19,000 would be the next level after that. So 20K is what it gravitates to in general. But yeah, if it falls through, next zone I think would be most likely 19,000 in this case. Let's move over to Ethereum. It's already showing the way rather than something like Bitcoin. It's so much stronger at the moment, Ethereum. It's got a long leg doji, a bullish hammer. It's finding structure. If the stock market moves up, whether you like to admit it or not, crypto peeps out there, you know that they're kind of correlated. It's a risk on asset. So if the stock market does rally, expect, of course, Ethereum to potentially move up and into the next key zones. Where could it go? It could easily get to a 1900 or even a 2000. It's quite strong here if it does rally. And if Bitcoin falls, well, so will Ethereum. If you haven't already, come and follow us over at FX Evolution on Twitter. We have a whole bunch of great shares out there. We always share stuff in our community as well. Discord community, over 10,000 of you guys in there. So join the public Discord, or if you're interested in finding out more about what we do in the private community, you can sign up for the private free 7-day trial. Link in the description down below. Do not forget, we have big news coming this week. There's a whole bunch of stuff on Tuesday to do with the European Union and everything there. We've got Flash Services PMI 9:45 New York time. And then we scroll down here and we keep going. We've got prelim GDP, whatever. And then we have Jackson Hole Symposium Thursday into the Friday. Core PCE price index coupled by breakfast at Tiffany's. I mean, breakfast at Fed Chair Papa Powell's bench. He'll be talking to us 10 a.m. about what he thinks the tools are going to be used and how much, of course, he believes in the US economy. That could always create fireworks in this market. So be careful for the turnaround Tuesday, guys, and we'll find out whether it does occur at a very key pivotal demand/resistance becomes support level. We'll see you soon. Subscribe if you enjoy the content and, of course, give it a like. Thanks for now.